Anyone who wants to bring their conscience into investment and wants to do something for the environment has to accept low returns, which is a very often heard argument against sustainable investment. Is it right or not? Green yield is a new Werthstein zeitgeist, and what makes it so interesting? It's easy to say. For about more than 160 years, the temperature of the Earth has risen dramatically, caused by the greenhouse effect. The financial industry brought green investments into play, and Werthstein is using the best-in-class approach for choosing the right products.
Climate experts agree that if global warming isn't stopped, it could lead to a catastrophe. The consequences are already becoming obvious. Melting glaciers, rising sea levels, and extreme weather conditions such as storms, flooding due to heavy rain, and prolonged periods of drought are increasing.
It's not just what you can do in your daily life for the environment. You can also take this into account of your investment decision. What does sustainability mean for investment? Giles Keating in London, president of the Werthstein Institute. Is that right? Should we not ignore our conscience in search for more return?
Stefan, you're right. We should allow our conscience to have free rein. That's why I like the idea of green yield. It's a fair return that doesn't cost the earth. So what you can go for is a portfolio of bonds that offers a reasonable return given the credit risk, but actually outperforms the broader market in terms of the environmental, social, and governance aspects of the companies that are issuing the bonds.
Robert Halver, head of capital markets analysis at Baader Bank and more than 25 years in the business. What is your view on this subject?
Environmental protection is important. I separate waste too and try to avoid plastics. But let's be honest, on the stock market there's not much scope for things like that. The stock market's about returns. And if waste separation and conservation of the environment don't prevail, they'll be unimportant on the stock market and thus also for investors.
Pros and cons in this point. But as Giles Keating, the president of the Werthstein Institute, pointed out, this zeitgeist invests into bonds of companies which in the same time contribute to the environment. But what are in the selection? What is the best class approach?
At first glance, you wouldn't see car makers as big environmentalists. But even among them, some are better and some worse. General Motors, for example, emits about 5 times as much CO2 as BMW, directly in the form of greenhouse gases and indirectly via power consumption. That gives BMW a better sustainability ranking. The advantage of this is that car makers are permanently under pressure from the competition to improve their sustainable behavior, because none of them wants to see their ranking drop or lose investors' capital.
Talking about losses, the opponents very often argue that the environmental idea diminishes returns. How are such investments performed? Robert Rothman in Zurich. What is the purpose of this thesis?
Well, the idea is really to contradict the popular misconception that sustainability demands an underperformance relative to the benchmark. In fact, this chart shows that a sustainable bond portfolio actually outperforms a set of peers, which I think is quite interesting.
What is that? What do you mean?
Well, the reason for this outperformance of a bond portfolio that includes an analysis of environmental, social, and governance criteria is that a lot of investors are using these topics as a proxy to evaluate how well a company is managed. And so the companies that have high sustainability ratings are often the companies that have good long-term leadership.
Valérie Plagnol in Paris. What should be considered by selection of such sustainable bonds?
Well, sustainable bonds offer many advantages. They are usually issued by well-established company, rated AAA, AA-. They offer a rather liquid type of base. less volatile than other asset classes, and in the end they are in a diversified portfolio SRI compliant.
I believe it has become clear. Thinking on the world of tomorrow means not negative impact on the investments of your portfolio. So if you have the same opinion, you can add this Zeitgeist green yield to your portfolio.